Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. So let's take a look again on the euro currency situation. On this currency pair has become more interesting and very probable that some significant move could happen in the nearest trading sessions on the euro currency, and probably according to the current situation it has more chances to happen to the downside rather than to the upside. We will start as usual from the daily time frame. On the daily time frame there is interesting pattern could be formed by the price action, and that pattern calls the Giordano stop grabber. The idea of this pattern is very simple, and this pattern is based on anticipation of action of breakout traders or traders who trade on unconfirmed trend shifting. How it works: this red line on the chart is the MACD forecaster indicator. In fact, this indicator shows the price at which MACD lines will show the trend shifting. So this is some kind of the trend break-even point. When price stands above this red line, MACD shows bullish trend. When it stands below, MACD shows correspondingly bearish trend. Take a look what the price action is forming currently. You could see that in the beginning of the current trading session, market has pierced this MACD forecaster indicator, and by this piercing, the MACD has shown the crossing of the lines to the upside and crossing the shifting to the bullish trend. And those who take a look at the line crossing of the MACD inside of the trading session could take the long positions with the placing stops somewhere below the swing low. So trend has turned to the bullish side, it's time to enter long, and so on. But currently market doesn't confirm this and returns right back and holding the trend on the bearish side. So depending on how market will close during the trading session, it will depend what we could expect in the nearest future. If market will close somehow like this, and at least below this red line at today's close, then the stop grabber pattern will be completed and it will be confirmed. It will mean that market has the solid probability to take out these lows. As we know, this lows is very significant area of support. So that is the 127 butterfly weekly pivot support 1. Also that is the 50% support in the monthly time frame. So the next target is the 1618 extension of this butterfly. It's 120 area. And what is more important, that between this level and that level, market has no additional supports. So this is, we could say, this free space. The market could just move easily if it will break below this swing low. Also, we have suggested that since this butterfly, as we said, it's not very harmonic, you can see the swing is much faster than the slope of this line. So probably when the butterfly has much steeper right wing, it very often proceeds to 1618 extension. Also, if this pattern will be completed, that price action will be absolutely logical and perfect from the theoretical point of view. It's retracement right back to the weekly pivot resistance 1 at the bearish trend, and 3-8 retracement, almost 3-8 retracement, this swing as respect of the 127 expansion of this butterfly. That is logical. So on the daily time frame, we should keep an eye on current trading session, how it will close in relation to this red line. And tomorrow we will definitely take a look at this. Well, now let's take a look at the 4-hour time frame. Here is the situation a bit more complicated. So that is our price action that we have discussed yesterday. I just want to remind you that that area, it's around 123, is the 127 extension of that pattern. A, B, C bottom, 127 extension. Here market has started to form some kind of the spinning tops, some kind of the indecision, and we said yesterday that after the flat and small candles, usually market shows some significant moves. For instance, consolidation, move to the downside. Some small candles, upward long candles. So that has happened. That's why we have recommended yesterday, maybe it makes sense to enter with a small position in this area on the short side of the market, although we expect that level to watch as our preferable area to enter on the short side of the market. But we should always think rationally, since the distance between this area and this area is very small. It's about 40-50 pips, it's not much. So if even market will proceed slightly higher, you will have just small position and you will easily take this drawdown where you could add the major part of your position on the short side of the market. Okay, now let's take a look what has happened during the previous trading session and what could happen. First of all, again, remind you that the 1618 extension of the same pattern, this ABCD pattern, also stands around this area, so it creates an agreement with this major 3-8 resistance on the 4-hour time frame and on the daily time frame. Now, also we could get this pattern, A, B, C bottom, 100% extension stands in the same area, it's around 123.45 inside between weekly period resistance 1 and this area, so the same level. And market in fact could reach it, because you can see that recovery was really strong to the upside when the market showed this pullback. Trend holds bullish on the 4-hour time frame. I do not like this ABCD also as well as this one, since the BC leg is just the 2 candles. I do not like it too much. Well, I prefer to see more candles and more harmonic move with the ABCD pattern. But as we said yesterday, this pattern is only that we have, so we will have to analyze particularly this pattern. So we can exclude that this move to the upside could happen. Now, on the 4-hour, on the hourly time frame, trend has turned bearish. A couple of developments could happen here. If we will take a look at this widening bottom pattern, although it has a bit slope to the upside, you can see that market 1, 2, 3, 4, 5 touchment of the borders, and market, although it has shown the recovery from this bottom, couldn't create the new high. So you can see thrust up to the downside, deep retracement. New swing to the upside creates the new high, deep pullback. Now new recovery, but market couldn't create the new high. That is the sign of weakness. Usually the broadening tops and bottoms comes to the breakout very often when the market couldn't create the new extreme inside of this pattern, and that tells that probably this is the first hint that probably market is ready to continue to the downside and show a downward breakout. That is what we could say based on this pattern. Now take a look at the Fib work. First of all, this top stands at 127 extension of that swing to the downside. The 1618 extension of that swing stands right here, again in the same area. Now, this swing to the downside gives us an extension of 127 right here. So that is a significant area where a lot of different Fib extensions, ABCD targets, Fib resistance areas comes in one tight range. So that will be a really significant area of resistance, and if market somehow, I do not know how, but if it will happen, market still will hit this area, well, that will be again nice area to enter on the short side of the market. Probably this could be some kind of the butterfly. I do not know. Maybe market will form this butterfly cell, for instance. This could be their left wing. Market will show some deeper retracement and will accelerate further to the upside. But anyway, that last splash that could happen, although the chances is not very good, as you can see in the current price action, but if this will happen, that will be absolutely in a row with our analysis, and if you will hold the short positions. you could hold it and add more when the market will, and if market will reach this area. If you do not have any short positions, I suggest you that you could enter here. Okay. Also with the small lot, because that the fact that market wasn't able to create the new high of the recovery and can't continue this move inside of this broadening triangle tells that market is ready to the is near to the X housing. So probably the sign of weakness, and probably market could continue move to the downside. So that's been said. 2 moments to watch. First of all, on the daily time frame, keep an eye on this pattern. That's significant since it will give us the context for the maybe for the week or for some trading sessions. Okay, so this will be very important for us. Another moment is keep an eye on the situation. If market will show somehow the last splash to this area, use it to enter on the short side of the market. If not, just hold your short positions, since if market will not be able to continue move to the upside, this will be probably downward breakout of this consolidation, and the first hint market already has shown. It couldn't create the new high and continue this move to the upside. This could be the initial side of weakness. So it's very interesting situation currently on euro currency. So keep an eye on these levels that we have discussed. Good luck and control your risk.